if the Federal Reserve is behind the curve, then they need to do something to actually get ahead of the curve, right? So it wouldn't be a big surprise if they actually start normalizing the balance sheet earlier than expected, because I think, as you rightly pointed out, that's what the markets are struggling with. At this point in time, there is a 75% chance that the Federal Reserve will hike in March when tapering ends. The debate now is whether it's 2 or 3 hikes where the market is concerned. It could be 4 hikes this year as well, depending on where inflation is in the next couple of months. The complication is that recently we've been seeing signs of easing where the global supply chain is concerned as well. So if that happens, then that in turn is likely to actually ease inflation expectations going forward, right? And that means that the Federal Reserve may not have to actually start normalizing the balance sheet as early as we actually expect. But again, the situation is very dynamic, it's very fluid, because I think Sri pointed out earlier on that there is a third Chinese city being locked down right now because of the zero COVID policy. Now, if they lock down some of the key production centers and some of the key ports in China, that in turn is going to restart or reignite the global supply chain delays that we've had that has actually been plaguing us since the third quarter of last year.
That is the risk, and several other guests have been highlighting this as well, Kelvin. Inflation dynamics, though, are not uniform on a global basis, are they? So if the ECB and the Bank of Japan are likely then to be slow followers of the Fed, then does that imply that those markets could relatively outperform the US if they are benefiting from their respective punch bowls staying around for longer?
Possibly, because I think where this scenario is concerned, it's almost ideal for the BOJ and the ECB, right? For like almost a decade, these two central banks have been struggling to get in some sort of inflation coming into the economies. And now, wow, without their doing, inflation is coming back into these economies. But again, the recovery in Europe and in Japan has actually been lagging behind. China was the first to be hit, was the first to recover, and it was the first to tighten in February last year. And of course, the markets were the first to fall as well. Then we have the US coming through right now and starting to actually tighten. The ECB and the BOJ is actually quite some distance away, right? Especially where the Bank of Japan, where the Japanese economy is concerned. So yes, we might actually get a little bit more of a run with regards to the Japanese and the European stock markets because of the fact that the real yields are not rising as quickly as what they have been doing in the US. You've had the real yields rising by about 35 bips in just 1 week. And that in turn is actually spooking the markets, causing pretty much the tech sector to be sold off, especially the loss-making tech sector, which is most vulnerable to this kind of environment.